Hello, this is John Piper with the weekend video clip, and it's Saturday the 1st of August, and we're looking here at the Krautgap results. I thought I'd start with Krautgap this morning, just as a quick look at the results, because we had another stonking month, plus 166 over the month, 13 winning trades and 3 losers, so plus 300 odd points, minus 150. All the losers were the maximum. It's been a pretty not erratic, but it's been an up and down month, but the results have been strongly positive. It's been a good year, in fact. We've only had one losing month this year. That's 1 out of 6. Well, that was a break even, which is obviously not so great, but otherwise it's January was also an excellent month, and you'll see the results are generally positive, with November being the exception to that, and also I suppose September wasn't too good either, but overall strongly positive over the period. I would mention these results include the suggested new rule, which a number of you, I've already mentioned it to you a few times, but we now take profits or half profits at plus 25 and move the stop to minus 20. Overall, this seems to reduce profitability, in fact, but it does also eliminate a large number of the max losses, and if you reduce the losses, it makes the system more usable, which is why it's a suggested rule change that you may find useful to incorporate. Anybody with Krautgap or A-B who wants more details, then please email me. Anybody without it, then you may want to consider getting it, because it continues to do really well. We're also looking at just actually fund management with Krautgap, A-B, with pro spreads probably, which is something which we're working on at the moment, so that's quite an exciting project right now. Right, we're now going to turn attention to the DAX, although of course Krautgap is on the DAX in any case, but this is the current trade. We're currently short of the DAX, and basically the pattern is, as discussed, A, B, C, then a regular A, B, C, and now what I believe may be the C wave coming in. So let's have a look at that in a little more detail. Okay, the peak came in around 11.8. which is up here. We then had wave 1, which divided nicely into 5. Then had this wave 2 with this failure, selling spike above 11.6, which was basically the sell signal, which I issued a little bit. I mean, there was a slight delay because it was quite a fast move, but we got in around 11. Well, the signal went out around 11.570, I think 60 or 70 thereabouts. So down at the bottom, we were up about 500 points, I guess, thereabouts, maybe a little bit less. Since then we've rallied. Now, if this is the wave 2, this would be the wave 3, and we now have this rather protracted, what counts as a wave 4. I had thought it was over at 11.3, but it's staggering on. It still looks pretty corrective. It doesn't look like it's new impulsive action, but in terms of time, it has become a little extended. There is a question mark here. I did send out an alert. I lowered my stop to 11.3, which got stopped out, and 11.5. So basically half the position was stop at 11.3, half at 11.5. For my trading, obviously you do your own. Other traders will do their own trades in their own way. I appreciate that. Now, if this is a fourth wave, I think it's really got to finish quite soon now. So unless we see something happen come next week, early next week, really Monday, Tuesday. We have to re-examine the situation. Thankfully, we've taken profits. We took profits, in fact, initial profits here, so that was quite a small one. But having taken more profits here, you should all be doing quite nice out of this particular trade. And if it starts selling off again, then we should do even better. My longer-term hypothesis here, and let me get rid of that, is simply that if this is the C wave, then we've got a 1, 2, 3, 4, 5. That'll be the first leg down. We then see a corrective rally, which I can only just show on here really, followed by a third wave down. So, I think there's certainly scope for a lot more downside here. I think that we could see the DAX below. We should see the DAX below 10,000 if this scenario pans out. Right now we've got a question mark about a rally, but it does look eminently corrective. Although we do have these 2 strong buying spikes here and here, which do raise some questions. So I have to see what happens next week. But right now the bear case is intact, with this question mark about this current rally. Okay, looking at FTSE, we still have a slightly different pattern here, primarily because we We saw this initial move, which I'm counting as a 1, 2, 3, 4, 5. So 5 waves down, A, B, C. So that would obviously allow a bigger rally on the DAX also. So there is that possibility. Resistance will be around the high here above 6.8, around 6.820 thereabouts. Alternatively, this could be initial leg down. Let's go down a scale here. The pattern here is not totally conclusive. I mean, this can be counted as a 5 down. 1, 2, 3, 4, and then there's a fifth wave which subdivides into 5 itself, but it equally could be counted as an ABC. This looks fairly impulsive, so really nothing much to go on there. Longer term pattern suggests a move up to the previous high around 6.8, as I said. So we'll just see how that pans out. I think the key thing is the DAX. Really, if the DAX starts rallying well above 11.3, that would be the key thing, I think, and that would suggest we're going to go higher next week, at least that's something to start with. On to the Dow, we have the similar pattern to the DAX, I guess. A, B, C, then an A wave which sort of forms a bit of a triangle, A, B wave in fact forms a bit of a triangle, C wave rally, and then the initial fall down of the C wave has in fact made new lows, so I guess that could be all we get on the Dow. Let's go down a leg. Okay, this is quite an interesting pattern. In fact, we have a somewhat clearer 1, 2, 5 waves down to there, 3, 4, another 5 down to there. That counts better as a 5. This looks quite impulsive, but now dithering around a bit. I think obviously 17.8 is a key level. It's about the right kind of Fibonacci retracement level for this rally. I'll look at that in a minute because the graphics will disappear when I do that. Yeah, I think if we start moving down, certainly if 1760, sorry, the low there around 17640 breaks, it would suggest we've seen the peak and we could actually start accelerating down there. So the Dow is quite important next week. Have a look at this Fibonacci thing. Okay, head to switch to an IG chart for this particular feature. So we have you can see the 50% level here quite clearly, well, very clearly I hope, and that's where we're bouncing around. So that's obviously important. The market's telling us it's important. The 50% level just reinforces that. So a fall from here could easily be significant. So look for either false breaks above that level to sell, or you can use extreme stop on the lows, either there or there if you're inclined to short the Dow. Again, it depends how it all works out come next week, because obviously we haven't got a clear sell signal. We have confirmation this is an important level, but we need to see the market do something. We need an opportunity which makes sense, basically. So a selling spike makes sense, especially above 17.8. But we don't see that, then we have to take whatever course of action we decide. Personally, it's not going to bother me. I get in about 17.7 current levels, 100-point risk. That's fine. Obviously, want to adjust the position size, that kind of stuff. Even 17.6 is not a big deal. This could be a large decline that I'm looking for at this point in time. So you have to balance the risk and the reward for your own purposes. Okay, this has been quite a long report, so I'll finish with a look at China and look at gold. This is the China 30 IG chart. Basically, we had the 1, 2, 3, 4, and then a fifth wave here. Not a perfect count, but not a bad count. The key thing really is the retracement. Two main possibilities: either this is a clear A wave, no real question about that. The question really is whether the decline's already started, in which case we're going to start to fall away possibly fairly immediately next week, or whether this move here is just an A, B, C. So these arrows are being really slow. I must replace this Mac as soon as I possibly can. It really is difficult to work with the thing. Anyway, that's an ABC. Then we could have a C wave. That would be fairly typical. You get the sort of decline like this. Bears start jumping up and down about it. You get initial rally. The bears are thinking, oh, it's all over. Let's go short. And then you get this another rally coming in to basically shake them all out before the real peak comes in. That would suit us quite nicely because we're not short yet. So obviously better prices would always be appealing. Otherwise, it's a question of getting in on decline next week, which we'll have a look at as it comes about. But right now, the bear case is intact. Nothing at all to question, in fact, at this point in time. It's looking more negative than maybe we'd like. But it just depends how this works out going forwards. The ABC count, I mean, I guess one point really is that if we look at the this action here, I mean, there is support of sorts, but it's really it's sort of indecision more than anything else. Are we going down into the abyss? And of course, there is support precisely where I've marked this line, and that's holding the market for now. The market may be like one of those cartoon characters hovering above the abyss, but just staying there for whatever reason before it actually does pull back. But certainly a possibility of a rally. So again, similar points actually to I made on the DAX and the Dow. You know, the negative cases remain. It's just whether we're going to see another upside blitz first. Right, gold. Okay, this is the hourly chart of gold, and we have built quite a nice little base here. These two buying spikes, one there, one there. Another positive is we have got 5 O's up here, which is encouraging. We then have this drift lower, A, B, C, which again isn't, I mean, in terms of time, it's a lot longer than the rally up, which is of some concern. We've now got another blip up towards 1100. As I mentioned, I've got an extreme stop to buy the market above 1105. Hasn't been triggered yet. We just need to see the thing motor really. There is a good base in place. We've had a big decline. It's just a matter of seeing it move. So as I say, I'll be buying it if it does, essentially. Interest rates, US interest rates are a factor here. I mean, gold is priced in the dollar. US interest rates rise, then that obviously would push the dollar up probably, and that would could have a negative effect on the gold price, obviously, because something becomes more if the medium exchange becomes more valuable. Obviously, there's less of them needed to have the same value, as it were. If you actually buy gold in dollars, obviously you do get that benefit. I mean, in the sense that you get the double effect of having dollars and having gold, in a sense. So if the dollar goes up, it wouldn't actually matter. But obviously, if you're just spread betting and the price goes down in dollars, then you don't have that benefit. So that's one point to make when investing or trading gold. Anyway, overall, I remain positive here. Just a question of seeing that actually happen. As I was saying, just a question of seeing that happen. Right, that's all for today. Quite a long report. Hope you found that interesting and useful. I'll be back with the opening report on Tuesday morning for subscribers. This is a good time to subscribe, actually, if you don't already. I tend to be more effective, and I do well in falling markets. So this may be what we have now, and this could be a particularly good period. Anyway, that's obviously a personal decision. Have a great weekend. Thanks for listening, and bye for now.